Hello, everybody. Welcome to another edition of EHP 10 at 10. Today I'm going to be, well, actually, I'm not running solo. I actually have my partner over here, Jen. Today is Thursday, so we're going to be doing a 10-minute segment. Well, at least it's scheduled for 10 minutes, but knowing her and I, it may run longer depending on what we want to talk about. But Jen, we definitely appreciate you coming back on the show. Welcome.
Thank you for having me. I'm so excited to be here with you.
What ditto. It's a pleasure to have you with us. So you're going to be speaking to us a little bit about obviously money, but you've got some tips for us, and you may have a little secret or two in terms of being able to make a little bit of extra money in this crazy economy. So I am definitely looking forward to that. And anything that you would like to talk about, I am all ears, and so is the audience. The floor now belongs to you.
Awesome. Well, hello, welcome, good evening from wherever time zone you are tuning in from. Just to let you know, in case you don't know who I am Jen Fontanilla. I'm a certified money coach. I've been in the financial money space for over 15 years. And I'm also an author and a speaker, and I'm dedicated and committed to helping people just make better decisions with their money so that they can create amazing, blissful financial futures. So with that said, I want to talk about something that's not so sexy, but super, super important. And last month, it was National Life Insurance Awareness Month. And you're like, oh, life insurance, why is that? It is so critical. And I want to talk about it because you know what? Think about this. This whole year, for most of it, has been crazy. We've been in quarantine, and we have COVID, and so many things have happened. And we think about it, if we weren't protected with life insurance and something happened, we passed away or a loved one passed away, I have to be honest, Eric, I was thinking about, my gosh, how many people were not insured? How many people are in a situation where they could have we're all like, oh, I need a stimulus check. Oh, I'm thinking, how did people do it? How did people make through all this mess? And so when you think about it, there's such an importance when it comes to life insurance. And so I don't know where you're at. I don't know what your experience with it is. I don't know if you have this belief that, you know what, I don't need it. I'll tell you a story. There was one time, this is years ago when I first got involved in this industry over 15 years ago. And I remember going to a house. This is back in the day before Zoom. And before Zoom, I used GoToMeeting. And so I used to go to people's houses or go to the office. Now everything's virtual. But I remember sitting across the kitchen table from a potential client. And it was a husband and a wife. And they had a small child. And I remember explaining, now the wife wanted the insurance because she understood the importance. But the sad thing was, the spouse was saying, well, I don't need to get this. This doesn't make any sense. I don't want to waste my money. They can figure it out on their own. And I sat there across the table thinking like, oh my gosh, what a selfish thing to say. And the sad thing was she was nowhere near in terms of income making what he was making. And I thought to myself, if something happens to him and he doesn't get insured, what's going to happen to this lady and her small child? And I've seen this happen time and time again where people I think it comes from people not really understanding the importance of life insurance. And, it's not this selfish thing. In fact, it is very selfless. I think it's a loving act. And so I want to just go over 8 different things to kind of just inspire you, I hope, to encourage you to understand its importance, to understand its place when it comes to a financial plan, okay? So the first thing is that you just never know. Okay, when you think about, Benjamin Franklin, in fact, he said, the only things that are guaranteed in life are death and taxes. So I'm sorry if we are going to die. And so that isn't something we can avoid. And so but here's the thing, you just don't know when. We don't know the when. It's not a matter if I'm going to die, it's when am I going to die? And if you can remember that and know that and really internalize that, then you realize like, hey, if anything could happen to me at any given moment, I can totally get hit by a truck and pass away. But if I pass away and I have insurance, then my family can take care of the bills, a mortgage, whatever. My child can continue to go to college or whatever. And so, the other thing too, it also provides your estate tax-free cash. Tax insurance, the death benefit. The death benefit. And so it's so powerful. Think about even just in the situation that we're in today, people that just lost their jobs like this. All of a sudden, that income isn't coming in anymore. It is no different, except in this situation, there was a death involved. And so if we don't have that money, that death benefit to take care of the family, you know, what do you think happens? And let me tell you, I think this is so important to stress. Car washes, bake sales, fish fries, and GoFundMe are not a financial plan. And I see it time and time again online, people posting GoFundMe because somebody passed away. It's just not the way to go. And the crazy thing is people don't realize it actually is not as expensive as you may think. Even if you got a simple burial policy, even if you got a simple term policy at the minimum, and we won't go into it tonight, but there are different types of insurance policies. But the thing that I want to stress upon you is that think about the consequences. Think about what happens if I don't do this, okay? So number 2, funerals are expensive. I think sometimes I've heard people say silly things to me because I've been an insurance agent for in this entire time as well as a financial advisor. And I hear people say things like, oh, you know, well, just bury me in a box or just cremate me. Let me tell you, it is still expensive to get cremated. And in some cases, like a funeral can cost anywhere, a basic one. I'm not even talking about bells and whistles. A basic one can cost between $7,000 to $10,000. And people, when people don't understand the cost involved, we can't plan for that. But imagine if you know at the base minimum that $7,000 is what a funeral would cost. How many cookies do you need to sell? How many cars do you need to wash? That's not something you want to be doing when you're in a situation where you're mourning. So this is why I'm not painting a really, happy, rosy picture, but this is to urge you to see. This is me urging you to take a serious look at what happens. This is when you don't know what you don't know. And if you've never looked into the cost of certain things, I mean, granted, nobody's going to be looking up how much a funeral costs if nobody died. I'll tell you a crazy story. When I was in high school, I went to a private Catholic high school. And one of the senior projects that I had to do was plan my own funeral. That was an interesting class because you would think like, oh my gosh, that's so morbid. Why would you pick that? But you know what? I was curious because I thought, how much does this cost? And so I actually went to a mortuary. I went to a cemetery. I'm a senior at this point in high school. And I literally got the price sheet. I looked at how much the flowers cost. I looked at how much the glove for the pallbearer, everything had a cost. Everything had a cost, and it adds up. And it's amazing. And the funeral itself does not even include the land. I don't know if you guys knew this, but like in a cemetery, that land is almost like real estate. You can sell it like real estate, like housing. And so everything costs. And so this is why this is part of money, because if we're not prepared and we don't understand the costs involved with these things, this is how people get into a situation where like, oh my gosh, how are we going to pay for it? And this is the other sad thing too. How much family tension do you think is going to come from this?
I can definitely comment on that because
please share, Eric.
Oh my goodness. I had to bury my mom. And my word, there was so much tension when it came to that. Matter of fact, I'll give you another instance that probably went a little smoother than most. I was adopted, so my auntie and my uncle raised me, my adopted mother and father. When my adopted mother died, that's where the tension went. Where the money was going to go to. What is she gonna wear? How's her hair gonna be done? Like you were stating, all of those things are underlining cost. Thank goodness she had insurance to cover the expense, but just the sheer decision-making portion of that is stressful. And then, sorry to say, some people actually want to skimp on a funeral as little as possible so they can keep as much money as possible. In theory, the money doesn't belong to the person who's planning the funeral. It's for the person who passed away's final expense, but that's another conversation in itself.
That's another episode.
That is another conversation in itself. But I can tell you this: people who do not plan for funerals are just asking for trouble. They're asking for trouble. The expense needed in order to not only bury that individual, but also their final expenses too. So if I'm married and I pass away, I'm leaving my debt to my wife.
Yes.
Or possibly my children. So from that standpoint, not wanting to add that stress onto my other family members, I highly encourage the insurance. And don't think that not insuring your kids is a good idea. You're supposed to insure your children too, because unfortunately things happen. And a lot of times when you're looking at these different news reports, people have to bury their children. Obviously, you have to take time off work in order to do that. And then just from a mental perspective, you're not working like you normally would. So if anybody has ever had to bury a child, oh my goodness, that is the last thing in the world that you want to do, is to have that suddenly happen. But we have to be prepared for everything. So I'm sorry, I just had to just share that little tidbit.
I am so glad you shared that, because that was a personal experience that you had actually gone through to just really underline how critical this is. Because I think sometimes, oh, that's not going to happen to me, or like we hear things and we think like, okay, that's great, okay. But when we actually know somebody, and I just can't tell you thank you enough for sharing that. You're absolutely right. And that's also important to know, because when we don't even have the estate planning, when we don't have all those things laid out, like, okay, this is how I want my makeup done, this is what I want to wear. And of course you're theoretically doing all this before you pass away. That's the whole point. Then there's no arguing. When you have the estate planning done, nobody can really refute. Hey, Jen wanted this. She wanted this prayer. She wanted these 6 people to carry her casket. It's done. It's in a living trust. Like, you can't, that holds up in court. And the thing is, like, when we don't stop to think about, are my affairs in order? And the problem is when we don't stop to think about, like, let me back up. A lot of times people will spend more time planning a trip to Vegas than you will stop and plan the next 30 years of your life. And it's so disheartening as a person on this side of the fence looking at everybody. I'm like, please, this is so important, because I've seen the tension, I've seen the dissension, I've seen the ugly side of things. I've seen the people that have come to be clients who are like, I don't know, we're still trying to figure out if mom had another account at this bank. It is massive confusion. And that is not the stuff you want to be dealing with when you're mourning. And so this is why it's so important. So I just want to say thank you for sharing that.
Well, it's not a problem. And please let me keep my mouth closed and let you continue.
I love it. It's totally fine. So 3 is like, protect the ones that you love. And, there's sometimes this misconception that, okay, well, so one of you is a stay-at-home parent. And, oh, well, they don't need to be insured because there's this misconception like that person doesn't bring in income. However, think about this. There have been statistics that have shown that sometimes that it's more expensive for a child to go to daycare than to stay at home. So what I'm saying is the person that's staying at home, whichever parent it is, if this is a situation that you're in, you still have value. It doesn't mean that just because you don't have this traditional job where you leave the house and come back and you bring in a check, it doesn't mean that you don't bring value, because there are some parents out there, spouses out there, that all of a sudden that stay-at-home parent is no longer present. And now they have to figure out, how am I going to work full time and still go to work and have my kid looked after because that spouse is gone. So you still have value. And so I've seen this pretty commonly where people think like, well, she or he doesn't work, they don't need insurance. How are you going to pay? If you're the one going to work, how's your kid going to be taken care of? Somebody's still got to do the homework with them. Someone's still got to bring them to school. Someone's got to still give them baths and feed them. Because all of a sudden now you're alone. And I stress this because I see too often where people have this idea that just because somebody is a stay-at-home parent that they don't need to be insured. And I tell you all these things because every little part of all these decisions at the bottom of it all It affects your bottom line. It affects your finances, and not in a little way, but in a huge, devastating way. And I'm telling you all, I've seen it. I've seen it. When this is not in place, I'm telling you, insurance, estate planning is like the bottom foundation of any financial plan. Because you could be investing, oh, okay, you got stocks, you do Acorn, whatever it is, you do all these little apps, and you haven't accumulated a lot, but it's like sometimes it's invested in the market, and then that can take a dip. As you've seen, the market can go down. But if you don't have any insurance, and what do you got? Let's say you started your account and maybe you built up like $2,000 in your investment account. That is not going to cut it. And so it's so important that this is in place. This is the foundation of any financial plan. All right, let me go to number 4. Death shouldn't mean debt. Death shouldn't mean debt, because all of a sudden, your dependents, which could be your spouse or your kids, their life is going to go on. But if your income isn't coming in anymore, how are they going to live? How many times have you guys seen a GoFundMe page? And this is what I always see. Donate, please, such and such happened. So-and-so passed away from, whatever it was. This is to help take care of funeral costs. This is to pay groceries and food for the, surviving spouse and kids. And I look at that and I'm feeling for it and I'm sad for it. But at the same time, I have to tell you guys, to be totally real, I sit back and I think, why didn't you have insurance? Why didn't you have insurance? Because even if you get $8,000 in your GoFundMe page, that would never take the place of getting a $500,000 policy death benefit. And it just wrecks that family's life when all you had to do was have a plan in place. And something that I've been saying over this past year is be proactive so that you don't have to be reactive. Let me say that again. Be proactive so that you don't have to be reactive. Nobody should be planning things at the last minute, last second. What happens when you do that? Things don't get checked out. Certain things don't get missed. It's like, oh, I forgot that. Oh, because we were in such a hurry. And let me tell you, I've been through really difficult situations. And I'm telling you, like, I went through a divorce. That's a whole nother episode. But I was not thinking straight. I made the stupidest financial decisions because I was all messed up. And I imagine how people feel when they're going through death, when they're going through a mourning of a loved one. You're not thinking straight. That is not the time to be trying to make these big decisions about your finances and what should have been in place. This is why it's so critical for you to be doing this now. So like Ricky said, you want to read it, Eric?
No, go ahead, please.
Okay, so Ricky said some people are scared to talk about death. It's a part of life. It's absolutely. Thank you for saying that. And you're right, Ricky. Thank you for saying that. People are scared. And it's unfortunately, this is life. And we have to have these conversations with our loved ones. It's very important that we do. And of course, it's also, I wrote a book called Do Before I Do. And it's to have conversations with your loved ones, right? And I think when it comes to communicating about really tough financial situations, it's all in the way you approach things. Because I've seen this where somebody wants to go, well, we need to get life insurance. And of course, the joke is like, oh, what? So you're going to kill me so you can get money? Ha, 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 right? But if we approach it like, hey, I've been thinking we need to plan properly. Anything could happen. And then, most people have gone through some kind of death in terms of experiencing it with a family member or a friend. And then you can even share some stories because, if you really, granted, there are situations where people have tension, but let's take the higher road and look at, like, okay, let's say it's a family that really loves each other and like, hey, you know what, this is what could happen, but we just let's just be prepared so that things are in place. We plan properly. And it's just the way we approach it because yeah, you're absolutely right. People are scared. And I have been there. And it's sometimes a cultural thing. There have been different types of cultures where they absolutely do not want to talk about it. And I have to very carefully tread lightly and say, like, okay, but if this happens, this is what could happen. And this could be worse. And so this is not a situation about taking advantage of you or trying to make money off of you. This is about, let's avoid this if we take care of this.
Well, let me tell you something in the African American community. We've had offline conversations, and you're pretty familiar with,
yes,
with the African American culture. But
yes,
I'll say it: Us as African Americans, we do not insure ourselves properly. We just simply don't, because we're at the bottom of the economic scale. And when we're looking, do we have a choice of either investing a couple of extra dollars for paying for insurance, or a couple of extra dollars in terms of buying a couple of extra pieces of groceries? We're going to lean towards the groceries.
Yeah.
And facts are facts. It's a generational sort of thing. My parents had insurance. They told me to get insurance, not only to get the insurance that your job provides for you, but if anything happens and you leave that job, you have another insurance policy in place.
Yes.
And that is so key, that a lot of people was like, well, I just got my insurance. But, there's supplemental insurance that you can buy, in the event something happens. And even, let's just say, best case scenario, that things go well and you have enough for the funeral. Now, you're thinking about the transition in terms of like the ownership of the home. If there's a home that's involved, it has to be taken out of that person's name into your name. So there's a lot of legal stuff that's involved that requires money in order for you to do it properly. Taxes on homes have to be paid, things of that nature. Car notes have to be maintained. If a car is in a certain individual's name and the debt's not paid off, they'll come and they'll repossess the car. All sorts of things happen. So being underinsured is almost as bad as not having any insurance at all.
Absolutely. And thank you for saying that, Eric. It's true. And, I love that you brought up there's places that in terms of employment where they do offer you that. But here's the thing. First off, it's a lot of times it's not portable, meaning if you get fired or you quit, that coverage does not go with you. And a lot of times it's only covering 1 to 3 times your salary. So imagine if you're making, $40,000 a year, your family's going to get $40,000. How long is that going to last? What's going to happen the second year? So you have to think ahead. This is why, I'm telling you, even $500,000 is not enough. And it's, and depending on too, what state you live in and the cost of living and your lifestyle that needs to be supported, you really have to look at this, that, okay, am I properly covered? Like Eric said, there's supplemental, but you have to make sure that you have enough. You really have to sit with somebody. I don't care who it is. If you need to talk, I'll talk to you. But, you really have to sit with somebody to find out, do I have enough? Because I'm telling you, it's one of those things where you do not want to be doing this when it happens. Not if it happens, when it happens. So, thank you for bringing that up. The fifth reason is anything can happen. And so this is also important to talk about and implement in terms of getting a policy when you're healthy. Because forget it, if you got cancer, if you got some serious illness in terms of health-wise, you could most likely be uninsured. There's no company that's going to say, yeah, we're going to insure you. So this is the time to do it when you're healthy. And then also your rate, your premium, what you pay every month will be lower. So for example, when I will quote a client, depending on how healthy they are, then the rate will be much lower. If there's some illnesses, if there's diabetes, high cholesterol, some kind of thing like that, heart disease, you're called rated, meaning, okay, you got some health conditions, we'll still insure you, we'll still make you an offer to cover you, but you're going to pay for it. And the reason why that's the way, because there's actuaries, these people that just number crunch, and they know when people are going to die. I know this sounds so morbid, but they know when we're going to die. And then they realize hey, you know what? The likelihood of you dying because you have all these health conditions is higher than this very healthy person. So we're going to charge you more. So it behooves you to do this while you're healthy, and plus the thing too is as you get older, you're getting closer to death, right? We're all getting closer to death as we get older. The rate goes up because we're getting older. The likelihood of us, getting some kind of illness, natural illness or something like that. So this is the time to do it when you're healthy, okay? So because anything can happen, and you don't want to be in a situation where now let me look into it 5 years from now. It might be too late. You might find yourself in a situation where all of a sudden now you're uninsurable. And I actually had this case with a potential client. We ended up, I had a backup plan. So I found another company that would cover him. But the other carrier, the insurance carrier that I originally quoted it through, was there's too much cholesterol. There's some diabetes. I'm sorry. And thankfully I'm a broker, so I have other companies. I don't work for one. So I can look, okay, well, maybe this company is a little more lenient, but there are going to be some companies that's just like, absolutely no. So if there's a situation like that, and you don't want to find yourself uninsurable, especially if this is something that you have to have in place. Okay. Number 6, supplement your retirement. I think this one's really, really important. So how do I say this? There are some financial people out there that really hate life insurance as a way to save money. Okay. Or, oh, life insurance shouldn't be an investment. Okay. And there's some financial gurus out there that really hate it. However, I want you to stay open-minded. I want you to stay open-minded, know that there are strategies out there that use life insurance as a savings vehicle. And I'll admit, I came from a philosophy of buy term and invest the difference. I thought anybody that sold cash value was, evil. And then I woke up and stopped drinking the Kool-Aid. And then I realized when I did my due diligence and research, I was like, wait a minute, I just can't buy that everybody that sells insurance that has, savings in it is evil. And I did the research. And so I was like, wow. And now, like, I actually have that strategy myself. And so, it's not like, oh yeah, that's great. No, I actually, Eric, what's that commercial? Is it the president of the hair club? He's like, I'm a client myself.
I'm not just a president. I'm also a client. Okay.
Yeah, I do it myself. So I think that's really important when I'm talking about something that I'm really passionate about, that I'm implementing it myself. And so there are ways to create consistent cash flow using an insurance policy. Okay. And I'm going to leave it at that. And we can talk about this in a future episode. But, this is going to also be in addition to any investments or savings that you're already doing. But there are these amazing things that you can do with your policy that can create this consistent cash flow that allows you to have supplemental income in addition to other things. And remember what I said in the very beginning, the death benefit is tax-free. The death benefit is tax-free. So there's a lot of amazing things. Once you can get past all this other stuff, bad things that you might have heard about life insurance, or you don't think it's sexy. Let me tell you, consistent cash flow is sexy to me. Imagine consistent cash flow, right? How can that not be sexy? And so this is why I get excited, because not only is it protecting your family, protecting your loved ones, and allowing them, at the end of the day, it's allowing them to continue their way of life. It's not, we want to allow them to continue without having disruption in our absence. But when you can add in consistent cash flow, and even while you're alive, because there are ways where it's not like, oh, well, I have to die. Obviously, that doesn't make no sense. If you died, I'm talking about, no, you're still alive and you are taking advantage of the cash flow. So there are some things there. I'm going to leave it at that. I'm going to plant that seed, and we will talk about that in the future. But there are ways to supplement your retirement in addition to all the other things that you may be already doing. So keep an open mind, because there's so many powerful things we can do with life insurance while you're alive, not just you dying. Okay. So there's some benefit to you being alive and getting something out of this.
Well, definitely didn't know that. So we definitely are going to have a few conversations about that. I've got one question that I'm always curious about: term life insurance. How does that work?
Term life insurance is your most basic form. So the way that the easiest way I usually explain it is, think about auto insurance. You pay your monthly premium for auto insurance. You get into an accident, and then the auto insurance, kicks in, right? Obviously, you don't die. You got into an accident. This was not a death. Okay, so it's that simple. You get into an accident, then the auto insurance kicks in. With term insurance, it's purely insurance. There is no savings. There's no cash value. And those are the two main categories. You got term insurance here, just insurance. Then you have cash value, where there's a savings. So cash value, just think of it as savings. These are your whole life, universal life, index universal life, equity index universal life. There's all those categories here because there's a savings component involved on this side. And then term is just pure insurance. So yeah, that's how that works. And then in case you guys are wondering, which one do you get? I have both. I have a cash value and I have a term, because term is dirt cheap. my policy is like $14 a month for, I forget how much it is. It's like, I think 200,000 or something. It's $14 a month. You guys spend more on your cell phone.
I'm spending more on coffee.
Yeah, and coffee. It's not always the case that, this costs a lot. Now, when you have the savings component, when you're on this side, yeah, it's going to cost more because some of that premium is going to that savings component. But, there's this misconception like, well, I can't afford it. Come on, y'all. $14, $10. Even if you got a small policy, there's something. Because I'm telling you, paying for that policy, a simple dirt cheap term policy is going to take you way further than you selling 200 cookies and washing 30 cars. I know you don't want to be doing that. None of you want to be doing that.
Especially at my age.
Yeah.
But we do have a question from Soleil. Soleil is a friend of the show. She was wondering, should a single person with no dependents get life insurance?
That is a great question.
And thank you for your question.
Yes, thank you, Soleil. Thank you for being here and asking this. Great question. So in regards to, leaving a death benefit and you don't have dependents, no. If you want to use it as a strategy in terms of consistent cash flow, then the answer possibly could be yes, if it makes sense. So, I would have to take a look at your entire situation because it's very powerful. The strategy that I actually use myself. I do have a 9-year-old. It's just me and him. So, for me, like I mentioned earlier, I do have a term and I do have a whole life. I have a cash value policy. But I use this one. Yes, the cash value one has a small death benefit, but I'm not using it for that. I have the term for that. So sometimes people, well, should I get this or should I get that? Sometimes the answer could be both. It always depends on your situation. And this is why it's important for you to meet with somebody and just talk about your situation because everybody's circumstances are different. This is why I don't like it when I hear other people say like, well, you never should get this or you should only get that. It's like, my answer is always like, I need to know what's going on. It's not like you all go to the doctor and the doctor just prescribes a certain drug to you. No, they ask you questions. They find out about you. They find out about what are you experiencing? What are you trying to do? Of course, the goal is for you to get healthy. It's no different in my world. I have to find out what somebody's situation is and what is the goal that they're trying to go for so that we know what steps we need to get. Because I can easily say like, yeah, that doesn't make any sense. We're not going to do that. So I hope that helped. So in terms of like, having a dependence and you don't, then the answer is like, maybe not. However, if we're trying to build wealth and we're trying to build future cash flow, the answer might be yes. Okay. Perfect. So we got 2 more. Number 7, when you have life insurance, if you're a very giving, generous person, number 7 is that you have the ability to give to charity. I know sometimes I'm like, I'm a charity. I don't need to give to charity, right? And so, life insurance can enable you to leave that as a gift, the death benefit, or to a favorite cause, to a favorite charity. I just wanted to mention this. You might not be in that situation. You may feel that you are the charity, and that's okay because I can totally empathize with that. But I'll give you an example. I'm on the board of directors for a local nonprofit, and there's a lady who's a nurse. She's on the board too. And she doesn't have her dependents are grown. They're fine. She feels that they don't need the money. And so she is going, when she passes away, it's in her living trust and her will. Anything that if God forbid, when it happens and she passes away, her estate is going to go to the nonprofit. So there's different ways to give back to, an organization. And you can do that through, life insurance. That death benefit can go to a charity if that's the route you want to take, especially if you don't have dependents and beneficiaries that would, that need your help. Okay, so that's number 7. And then finally, 8, I think this is the most important one, is peace of mind. Peace of mind, plain and simple. Imagine, how do you feel when you're prepared? How do you feel when you're prepared? Things just feel like, okay, I can sleep at night. Everything's in place. I got this down. I know what's happening. There's certainty in your life. But when we're not prepared and think about when we don't know how a bill is going to get paid and the bill is coming up in 2 days and you don't get paid till next week. How does that feel? It's sucky, right? It sucks. And so when we have life insurance in place, think about those emotions. It brings this peace of mind, this calmness, the certainty, knowing like, hey, you know what? I don't know when I'm going to pass away. Anything could happen to me. But you know what? If anything happens to me, I know that my spouse is okay. I know that my kids are going to be fine. I know that they're going to be okay if anything, God forbid, happens to me prematurely. And that just gives you peace of mind. And you know, at the end of the day, that is so priceless. And so those are the 8 things about, you know, there's a few more, but, you know, I didn't want to, you know, this is not going to be a 3-hour podcast. So I hope this encourages and, you know, if you're somebody that's been closed-minded to insurance, life insurance, I hope this opens your mind to seeing the value, not only for you, but also your dependents, your family, and your children.
And, you know, speaking of children, I was just curious, person 18 years old, just starting to get a job. You did mention like the healthier a person is, the lower the rate is. So I'm going to imagine that an 18-year-old would probably have like the absolute best rate because of their age and because of their potential healthiness. Is 18 too young, or even 17 if you're in your own too young to go and actually get your own life insurance?
No, it's not, because there's policies that can be taken out on babies and kids. I mean, you've heard of the Gerber.
Yes, I sure have.
Yeah, that's 10,000, and it's a whole life policy. They use it as a savings. So no, there's no age restriction. But you made a great point. Definitely, the younger you are, the typically most likely the healthier you are. So of course, granted, if you don't have any illnesses, there's no serious health conditions, pre-existing conditions, or, you know, a family member, your direct, like father or mother has cancer, then most likely your premiums are going to be like, you know, super, super low. So I see Ricky has a question. Can you briefly explain whole life insurance? Yes. So the basics of it. So remember I said in the beginning, or you know, several minutes ago, we have 2 major categories. We have term insurance here, which is just pure insurance. There's no savings, no cash value. Okay, it's like auto insurance. You pay the premium, you get into an accident, the insurance company pays.
So that's like no fault insurance.
Totally. So you pay your premiums, you die, the insurance company pays your beneficiaries. Okay. On this side, we have cash value. So whole life is one of those that fall into this category of cash value. This is the one that has the savings component. So what happens is when you pay your monthly premiums into this policy, there is a bucket. Like imagine the savings bucket. And so your premium gets divided into, okay, this is the cost of the insurance, and then a portion of that premium goes into the savings. And so the savings is what builds up and accumulates. It earns a very low interest, but over time it builds up and builds up. And I'm so glad you're asking this question, because I do want to mention a lot of times, and I did this before until I woke up, a lot of times we're comparing apples to oranges, because sometimes you and I don't know how much you've heard, but a lot of times people will think like, well, you know, insurance, you shouldn't use it as an investment, blah, 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 because it only earns, you know, between 3 to 5%. And so when you think about, well, I can make 10, 8, 14% in the market. Okay. We might have heard of those things. And it's true, you know, on average, you know, the S&P, you know, is earning about 10, 8%. However, that's comparing apples to oranges, because the investments are taxable. Your cash value is not taxable. And so that is something that people do not pay attention to. And so we have to really look at what's called the tax equivalent, meaning how much would it cost, or how much does it take to be in my insurance cash value to be the equivalent of these investments that are taxable. And what I found and I've seen is that this side, the investments, need to be almost about 2.5 to almost 3% much more than what would have been in your cash value bucket. So be careful when people are making those simple comparisons, because they are not apples to oranges. You can't just simply compare somebody's Roth IRA, what mutual fund they're investing in compared to what somebody's life insurance is earning, which is about 4%. Because it's a whole different game when you're looking at the tax consequences at the end. See, a lot of financial people will get caught up in like, this is how much it's earning. We're going up. We're in the accumulation phase. But a lot of people fail to take a look at what happens when I get there and I'm ready to retire and now I'm going down the mountain. We only pay attention to how much I'm earning, how much am I making. We fail to look at what are the tax consequences because we don't know. Do we know? Do we know where the tax rate is going to be in the future?
Definitely not.
We definitely don't.
I have two questions.
Yes, go
just
for
to
it.
make sure I have a clear understanding. So let's just say that I have a $250,000 policy that I can tap into as far as getting money out. So the two questions are: one, is it more or less considered a loan, or am I just decreasing the amount of money that my policy is worth that I'm taking out?
Great question. So it's calling like you're borrowing against. So let's say this 250,000, like your example. Let's just say you took out 50.
Okay.
50,000. Okay. So now there's a difference. You took out 50,000. It is a $250,000 policy. So what happens if you decide not to give it back and you die, the death benefit just gets reduced by the amount that was taken out. So now the death benefit becomes 200,000 because you took out 50. Okay. It's that simple. I mean, I'm trying to make this simple so it don't get convoluted. But yeah, that's a great question. And so that's the flexibility, because there can be situations where, let's say your credit's jacked up and you can't get a loan. Let's just say that's the situation. You can tap into this. Let's just say, there's situations where you can, and honestly, you can use it for anything. You can use it for an emergency. You can use it to get rid of debt. You can use it to, remodel your kitchen. There's so many different things that could be used. And, a lot of people don't realize the power behind it. And that's what one of my favorite things about this, as I learn more about it and just like, oh my gosh, I get so excited, because the thing that I'm most excited about is that it can provide consistent cash flow and it's tax-free. So Ricky, going back to your question, that's also another component like Eric brought up, where, when there's a cash value in the policy, you can do things like that. You can take, you can borrow against it. We call it like a loan. If you don't have to pay it back. If you don't want to pay it back, you don't pay it back. Let's say Eric never pays back that 50,000 he took out. Then it just gets reduced. And then there's the death benefit, the remainder. Because sometimes that might happen, but heck, there's still 200,000 going to the beneficiaries. So that's an advantage, and that's a choice if you make, but that's something that you don't have in the term version. Okay, because remember, the term version is only purely insurance. There's no savings, so you can't do something like that. It's only if there's a bucket. Now, granted, in the versions where there's a savings component, it does take time. It takes time to build that, and some people will call it overfunded. I'm going to keep it simple, but there's ways to overfund it, meaning like now your goal is just to put as much money into this thing as possible. So there's ways to accelerate the savings into that bucket. Yeah.
Okay. And I'm just going to say an example. If your policy requires you, for example, to pay $100 a month, if I put in $150 a month, then that would accelerate it. Am I anywhere close? Okay.
Yeah. Yes. Okay. And only in the cash value version. Okay.
Understood.
Just always remember, guys, term is just the most basic vanilla version.
Okay.
Yeah. No fancy things that you can do with it. Yes.
All right. Perfect. Well,
great questions,
definitely been educated.
Good. I'm glad. So that's it. We can talk insurance all night long, and I'm sure you don't want to hear all that. But if there's any questions that you have, drop them in the comments. You can always reach me. If you can see my handle right there on Facebook or Instagram, or you can simply go to jenmoneycoach.com. If you want to talk, you can book some time with me. I'm more than happy to have a conversation with you and, just straighten some facts out, because sometimes, I remember before I got into this, I don't know what the heck all this was. I thought it was boring. But you know what? I'm telling you, there was something so fascinating about like sharing with people, like, oh my gosh, how do we make money on money? How do we maximize our returns? How do we use these strategies that so many other people have access to, that so many other people are aware of, that how can I show other people, like, you can do it too? And that's all it is. And a lot of times that's what it takes, like us just becoming aware and mindful of what's out there. And then the next step is implementing it. And that's the part that's exciting, because I'm like, man, it can't, why don't we all get in on it? Why don't we make money and protect our families and ourselves? Because remember, at the end of the day, you are your number one asset. And this is why this is so important for you to protect not only your family, but yourself.
Definitely. And Ricky sent a thank you for clarifying.
Oh, you're so welcome. Absolutely.
All right. So did you have any more points? Because it was only supposed to be a 10-minute segment, but it turned into a 45-minute segment. But it's definitely something that we feel that we need to know. And, sometimes on these 10 at 10s, sometimes the topic is so interesting or the topic is so important that sometimes we will take more than 10 minutes. But I just appreciate knowing how busy that you are, that you did take the extra time to clarify everything. So I definitely appreciate that.
So welcome. I'm so grateful to you, Eric. And I'm sorry James isn't with us tonight. Hopefully you catch us on the replay. But thank you to all of you who tuned in tonight. I know you could have been anywhere else, especially for those of you on the East Coast. So thank you. And I hope this was inspiring. I hope this encourages you to look into it. And I think my last word is, like, you know what? Take a look at your own situation. Stop and make some time to evaluate your own situation. If you have enough, if there's some changes you need to make in your own financial situation, because this is the time to do it. This is the time to do it. No, there's no better time to do it than now.
Absolutely. We could sit back and we could talk about a ton of different things, but we definitely appreciate you taking time out on this. What is this, the third Thursday? On this third Thursday?
Yeah, third Thursday.
So we will definitely be seeing you in the future. And, maybe you can come back and you can talk some other topics with us, because I know we had a pretty spirited conversation off camera.
Yes, anytime. I'm more than happy to come back whenever, next month, whatever. You let me know. I'm more than happy to be here and help and serve your audience.
Well, hey, you know what? We'll definitely seek you out for some other opinions too, with the upcoming elections and stuff that's coming up. Find out what's going on over there, because you are from California, and as we know that the Joe Biden's running mate, she's the senator out from California. So yep, first female nominee for vice president. So that's definitely historic. And just as a person who you have your ear on the pulse on a lot of different things, just kind of want to get your opinion on some of that. We're not going to take too much of your time now, because I know you got other stuff to do. You got a little one. He probably has homework, all that other good stuff. But we definitely appreciate you taking time out. If you want to, you definitely can go ahead and plug, your websites, your YouTube page, your Twitter, plug all of that, please.
Thank you. Yeah, if you want to carry on a conversation, you just simply can just go to just right there, jenmoneycoach.com. More than happy to talk about it, because I know there's a lot. And Ricky, thank you. You're so welcome. I know that there's like a crap ton of confusing information out there. And I'll say this, because then it's like, well, what makes you different? Let me tell you, integrity is so important to me. I have given up some clients to other people when I was in a situation where I was in transition between companies, because when I feel that something isn't really fully serving a client to the utmost ability, or I feel that they can go somewhere else and get it, I have given those clients to other people, and I'm talking millions of dollars, because it was more important for me to see that they were getting taken care of, and something that I couldn't do at that time, because I was moving between companies, and there was some licensing things that what I wanted them to do wasn't available from what I could give at the time. And I'll be honest, two of those people were my own parents. They were my clients when I was an advisor. When I was in transition, I needed their stuff to get transferred to another brokerage account. So, for me, it's so important that people get this information because I've seen the devastation. I've seen the mess. I've seen what happens when people aren't prepared. And it's so heartbreaking, especially when it comes to death and when it comes to lack of life insurance, because at the end of the day, I always look and I'm like, it so did not have to go this way. It so didn't have to go down this way. And then I start to ask, who talked to them? Did somebody stop to try to talk to them? Then my third thing is, were they open-minded if somebody talked to them? Because that's the other challenge too. I can be so willing to share the information and anybody else out there that's willing to help. But sometimes we have to, let's be real, sometimes we're not open-minded to receive the information and do something about it. So we both got to do our part. So please, take this information, let it, sink in. You got questions, let us know, drop it in the comments, reach out to me, because it's really, really important that we just do better. We do better in terms of taking care of our families. And, especially to you, Eric, I'm also involved with another company where we are doing financial education to Black churches. And I'm not sure what the audience comprises. My son's half Black. So just to let you know, which is why I'm so invested in all this information. And I want to save him from you don't have to go down this road. You don't have to see this. You don't have to be part of these statistics. Because I can't talk. These statistics are so disheartening when I see who's at the bottom. And it doesn't have to be that way. And so this is why it's so critical for us to get this information out to all these communities out there, because you can do better. We need to change the culture. We need to change it so that this information is getting out there so that you can act upon it, you can implement it. And it's time for you to all get your own money. Why is everybody else getting it? It's time for you to get your own money, learn these strategies, implement it, be open-minded to hearing it, and then taking action.
I absolutely agree. Those who, fail to plan to fail, or the reverse. So you're absolutely right. So having insurance is just a part of any other planning, just as important as a 401k, just as important as investing in stocks and bonds. All of these are strategies that you use. You're obviously hoping for the best, but you're preparing for the worst. If a person becomes disabled, that's another thing that I just thought of. That would be a great reason why you'd want to go ahead and get the cash value plans.
Yeah.
So you can supplement that income, short term.
Yes.
And if anybody has ever tried to apply for disability somewhere, that is brutal. Short term or long term disability, that would be another situation where you could tap into that insurance, because it's so much red tape. Getting money from a life insurance policy, from what I understand, is so much easier than it is to try to collect benefits that you've been paying into. And then the death benefit, if somebody happens to pass away from Social Security, it's like less than $300. And then you just alluded to it runs like $7,000 to plan a decent burial or cremation. So
that's starting.
Yes, starting. That is the absolute bare minimum. That's the bargain basement budget funeral.
Yeah, you ain't even getting roses. You're probably getting plastic flowers. I'm not joking. Yeah, forget the beautiful, casket with the beautiful trim. It ain't happening. And no, why? It doesn't have to be that way. Have it planned out so you can have things done the way you want it to be done.
Exactly. And I couldn't agree more. All right. Well, let me stop throwing stuff out there, because we'll be up here another hour.
So thank you so much.
You're very welcome. And don't forget to leave your information on the Ear Hustling Podcast website. So anybody who wants to get in touch with you can schedule an appointment for you. Are you available through phone, Zoom? What platforms are you available on?
Both phone or Zoom.
Okay.
Whatever you're comfortable with.
Okay, excellent. Well, we definitely appreciate that. So this has been From Our Mouths to Your Ears, to quote my brother James. And America, we would like for you to stay safe. Jen, anything else before we sign off tonight?
No, that's it. Be open-minded and take action.
All right, thank you. Stay safe, America, and don't forget to vote.
Yes, good advice.